G'day folks, welcome back to another update for Bitcoin and Ripple. Now there is a downside risk on the charts which have been showing, so just be careful about going too strongly bullish at this point. I'd like to see it break through some resistance. Before we go any further, appreciate hitting that like and subscribe button to support the channel. Also, don't forget to reference the +1 videos to help you better understand some of the trading strategies and methodologies we use in the analysis. It's going to come up in a minute or two. Also, to get more value out of some of the trading strategies, reference the Patreon page where we look at weekly bullish share reviews, but also do intermittent share reviews coming up. So we just did one on Meta today with some insider transactions that have happened. So let's now look into the analysis or the fundamentals for Bitcoin and Ripple. So Bitcoin is riding a strong bullish wave with institutional demand, spot ETF inflows, and favorable US regulatory moves, such as strategic reserve and crypto access in retirement accounts, pushing into fresh highs around 124,000. Analysts foresee continued upside towards 135 to 150,000, though risks like volatility, macroeconomic shifts, and policy changes remain relevant. For Ripple, benefits from growing real-world payments adoption and recent legal clarity, especially following settlement of its SEC case. Analysts estimate XRP's August range between 3 to 330, with bullish scenarios stretching to $4 to $6 if momentum and institutional interest escalate. So we always look at the long-term trends to get a better idea of the overall trend. You can see here on the weekly, the price is well above the moving averages, giving us a bullish momentum, but do notice the CCI is dropping off, got lower highs on the CCI versus higher highs on the price, and that's why I've got it moving sideways in terms of momentum or direction, only because of this CCI is broken down below those moving averages, which is causing a bit of weakness in the price, even though it looks like it's strongly bullish. So just be cautious about going too strongly on that. Also, this bearish divergence as well, we've drawn a little target range there. That's a 23-38% range. If the price drops, we expect it to reach into that area as well on the weekly. On the daily, likewise, it's hit this resistance at 124,500 and bouncing down from there. So this one we've got going short momentum, bearish momentum with the price below the moving averages as well as the CCI. So taking short trades on the hourly if you're trading that. And that's more evident here on the hourly. I'll go to that in a second. But basically, again, back here, notice we've had this slightly lower highs on the CCI versus high highs on the price, and that's actually started to pull back again. Again, I've got another little target range there on the daily for a pullback. On the hourly, this has been bearish now for a number of days since that period back there. Again, going short according to the daily trend. Now, the one thing we look for on the hourly before I go into the back test is we look for any divergence. And you can see here the first working backwards, we go from that point there, so slightly higher lows on the CCI versus lower lows on the price. Now, if this was to break up, let's take it back to the recent high at that point. You can see there it's already hit the 23-38% range. So what we'll do is we'll take it back to that range there, and we'll mark a little 23-38% target area. So that's a minimum retrace we expect. Could go a lot higher, or you could have actually stopped at that first point of Fibonacci that we drew first. But I'm going to leave it there at the moment to see if it does actually hit that range. Again, it could go higher than that. We'll take it one step at a time. Now, in terms of the back test, going to this is the hourly chart on the right, and over here we've got the daily. So again, going short in alignment with the daily, taking short entries only. And what I've got here, first off, going long during this period, you would have been going long from around about that was around early May. So that was about from this period back here, you would have been going long, stabilized during that period as evidenced by this. And this is the back test for the long positioning. Now you'll notice here we average down, and you should not have been in the trades during this period because again, you would have been noticing we had a bearish divergence here. Always pay attention to divergence. There was a bearish divergence here, and you would have ideally got out of the long positions, let's just say, long positions at that point. Now, since then, you would have been going short from when the daily broke below the CCI, and at that point there when the price is below the CCI. So you would have started going short from this period back here, and that coincides also stop going long at that point there. So from that point, you notice there have been a few trades made there. So at that point, the profitability was 187,500, and it finished off at 195,300. So you made a nice little gain there going short, and you would have stopped going long at that point, as I said, at the very latest, once you saw that bearish momentum on the daily. So let's go back to this point here. If you stopped it back here, according to the daily chart, at that point the profitability was about $33,000 at that point. So again, always follow the trends, always pay attention to divergence, and especially on the direction of the daily trend on those CCI and the price moving averages. So now looking at Ripple on the weekly, first off, the price is above the moving averages, giving us a somewhat bullish momentum, but notice it's creating this flag versus lower breakout to the downside of the CCI. So that's a bearish move on the CCI, even though the price looks like it's bullish. So just be cautious. Again, similar to Bitcoin, this may actually break further to the downside. And that's why we look at the smaller time frame levels to see what's happening. And here on the daily, you can see it's already broken below that moving average range of the price chart, and so is the CCI. So that's a bullish momentum if you're trading on the hourly. Sorry, a bearish momentum. It's going short, if you're going short on the hourly. And then looking at the 1 hour chart for any micro moves, and what we're looking for is divergence. You can see there that's slightly higher lows on the CCI versus lower lows on the price. That's a bullish divergence, and again we expect it to break higher. And in terms of a Fibonacci retrace, let's take it back to that level. You can see it's already hit the 23-38% range of that little range there. It's already hit it, so effectively finished. But even if we drew that to that level, not much difference there. But even if we took that to that resistance area, it's just shy of that 23-38% range, and it may well actually get into that range longer term in the next few days possibly. So just be cautious of that. At the moment, the CCI is broken below that moving average range, and the price looks like it's about to break lower still as well. So just I wouldn't be going long until we saw a bullish move on the daily in this one. Again, looking at the back test. So first looking at got here the 1 hour time period. Let me just get rid of that divergence. So again, you would have been going long during this period based on the daily, and close out your long positions when the CCI hits that moving average range on the daily. And notice there, it gives you an early warning to get out near the high there on that little hammer or the red candle up there. So you would have got out early there, and that was just before that decline or the average down here going long. So you would have got out just before that drawdown, and that would have reaped you approximately $353 if you're trading one contract or one in each of these trades. And then since then, you would have gone short from that point. When the CCI and the price were below the moving averages, you would have gone short in that period, and that equated to this period from that point there. So you would have gone short in that little range there. So I've got here both the long term, the long positioning and the short positioning, just to show you the what it would have done in both instances. So again, reference the +1 videos, links in the description below, but also the Patreon page where we look at bullish shares and what's happening in the share market, the world. Thanks for watching, and see you in our next video.